Good to see you again.
Just a quick disclaimer, Max and I were in the exact same panel yesterday with the exact same topic and clearly the same audience. So this is going to be our fan club. So thank you guys for joining us. We're here to talk about institutions, institutionalization of crypto, and how far away we are, if at all, from the big guys coming to join the space. Quickly, I'd just like people to introduce themselves as brief as you can. Max, if you could kick us off.
Yes, I'm Max Boonen from B2C2, one of the main market makers in the space, based in London here, and one of, I think, the first crypto firm to be regulated as a MiFID investment firm here.
I'm Chris Jenkins from a company called Caspian. We specialize in front office technology for crypto funds. Grew out of a similar company in the traditional space, based in San Francisco.
Meltem Demirors with CoinShares. My partner Ryan was just on stage. I run the New York side of our business as well as our private strategies.
I'm George Zayra from BeQuant. We operate an exchange and looking to launch a prime brokerage business as well.
Fantastic. So just wanted to kick the discussion off really by talking a little bit about what we mean when we say institutions. It has become, I think we'll all agree, something of a marketing term, broadly used. Maybe, Chris, we can just start us off by saying how you would define it and exactly who we're missing when we talk about institutions at the moment.
Sure. I think they mentioned it earlier as well. I mean, for us, institutions is any entity that is trading crypto. So whether that's a crypto hedge fund or another kind of crypto fund, a prop shop, or a broker. What we're missing is probably when people think of the institution, is the large real money institutions. So the Templetons, the Schroders, these types of firms. And I think those, when people talk about the institutions are coming, I think that sort of wall of money that was talked about last year that's what we're talking about. However, I think when we're all working with institutions every day, and there is a very real institutional marketplace for crypto today. It's just a certain segment of institutions.
So if we just talk a little bit about that gap that we still have, so those big banks, big hedge funds. I mean, we know that blockchain.com, Coinbase, they have all, I mean, they're just two, but two of those who have been shrinking perhaps their institutional forecast. I mean, they brought on Jamie Selway, for example. He left saying, or at least publicly, that the reason was because the institutions didn't come and they expected them to. So if we just use that as a starting point on which to begin the discussion, why are those institutions not coming? And did we just get overly excited?
I think if I can take that one, I think that the problem is, why did we want those institutions to come in the first place? And I will use a few examples in the crypto business that I think are really understood the dynamics. So you look at Coinbase, they had to let go 30 people because on the HFT side, it wasn't working out. There was no reason actually to try to make their system faster because it's not serving any significant portion of their user base. Now you look at the Kraken on the other side. A couple of months ago, they not a rebranding, but they redesigned, and it looked very much like Marvel Comics. It was very, childish and teenager-like, and people were mocking them. But actually, I think they really understood who they were talking to. Sometimes you watch TV, there's an ad, you're like, that's a stupid ad, but you have to think, who is the ad for, right? And I think that Kraken really understands that the money is in the retail flow, in getting a lot of users to trade on their platform, and they don't need to have HFTs or huge asset managers to be a successful company. That's something that Coinbase hasn't understood, although weirdly, the reason that they're so valuable is because they got 20 million people to sign up on their platform and to start trading, and there were 20 million people that were probably not trading before. That's where the value is. And not every exchange in the space has understood that, but when you look at the most successful ones, you've also got BitMEX, Binance, and those guys really cater to a retail user base, which is where the flows are coming from, and they're going to come from retail for the foreseeable future.
So just before we move on, if that's a question of why do we need institutions, but let's just begin first of all with talking about why they haven't come. So Chris, if you just start us off with Coinbase, for example.
I mean, there's a lot of reasons the institutions haven't come. Again, going back to my previous point about what that actually means.
Yep.
I mean, I think there's sort of somewhere between 800 and 900 funds in crypto at the moment. So you could argue that they're already here. But if we talk about the real money funds, I mean, whether it's infrastructure or regulation, or actually maybe just getting mandates in place to be able to do that. These big funds, they can't just invest willy-nilly. Maybe they have a small segment that they could invest in an unlisted or risky securities, but realistically, that's not there yet. So there's quite a lot of reasons, and Max raised a good point. Why are they needed? They're not needed at all. But they're an evolution of the marketplace, and as crypto matures and becomes more of an asset class in its own right, then they will come. It's not a question of if they'll come. They will come because there's opportunity for them.
So when, not if.
Yeah, for sure.
Meltem.
I guess I have a very different view of the world. If we're talking about institutions, when we talk about hedge funds and crypto funds, a very small market. When I talk about institutions, I'm talking about endowments and pension funds and sovereigns, who are the largest allocators in the world. What I think is interesting about crypto is it's an asset class that's historically been very friendly and very accessible to retail, but not to institutions. And there's two components. One is really around technology and risk management, which really, if you're an allocator, your job is managing risk and return, right? That's what you do as an investor fundamentally. And the second component, which I think is the more pressing one right now, is there is a massive intellectual hurdle you have to get through where you have to believe in the premise of Bitcoin, really. And if you look at the world of assets, I would love to believe that someday pension funds and endowments are going to be buying, pardon my language, but they're going to be buying and trading shitcoins. They're not. Really, the only asset class that they're interested in is Bitcoin, because every other asset has virtually no liquidity. And today, if I want to write a check, if I'm a large pension or a large endowment, I don't get out of bed unless I can write a $100 million check. They're not writing $50,000, $500,000 checks like crypto funds are. They're writing checks in size. And the challenge is, if you're looking at allocating to whether it's the crypto asset class, whether it's direct investing in companies, there are really very few publicly listed companies. There are very few publicly traded vehicles or notes in which you can invest that have liquidity profile and the risk profile that fit into your mandate, that are going to pass through your risk review process. But most importantly, I think the challenge is if you want to buy, open market $100 million of Bitcoin, there are very few venues where you can execute that trade today. You're going to have to piece it up and execute it over a 10-day window because the market's still liquid, and there just isn't that robust market yet. So when we talk about institutions and the institutions are coming, I think the short-term view I have is it's great more family offices and macro funds are getting involved, but really to me the holy grail is how do I go to someone, Ontario teachers, CalPERS, people who are managing billions upon billions of dollars, they're managing more than the crypto market times 20. Right? How do I go to those people and convince them that they should be making a $100 million investment into Bitcoin? And how do we give them a way to do that fits within their existing investment mandate? Because at the end of the day, going to someone who manages, $500 billion of assets and saying, your investment mandate has to change so that you can make this $50 million investment, they're going to laugh in your face, right? And so I think, again, there is this point where the two sides are sort of talking past one another. We will get there, but I think it starts with us creating products, services, and offerings that fit into the existing boxes, and crypto growing tremendously as an asset class before it's even meaningful enough for them to engage with it. Sorry, that's the pessimistic view, but I'm trying to be very
George,
real.
I don't know if you want to add on to that, or maybe I can just rephrase the question slightly for you.
To add to the point on the actual regulated institutional investor. To add to the point of where the regulated institutional investor crowd sits, right? Yeah, the size of the market is just not there yet for them to be fully engaged in, but a lot of them are doing their research. The other point is regulation. A lot of them are under a tremendous pressure from the regulators, and they need to do everything by the book, and the space doesn't have the rules of the game established yet. So it's an extra risks that they're mindful of, and it's holding them back, in fact.
Well, there's also a reputational risk,
Correct.
right?
Well,
I think the biggest concern is if you're a CIO in your investing, you don't want to be the person who invests in a firm that then later is part of some crypto scandal. And unfortunately, our space hasn't been particularly PR friendly.
There's something that's missing, and I'm with Chris here. There's the concept of a mandate. You know, when we say institutions are in the business of generating returns, that's not true. They're in the business of following the mandate that they've been given by the investors. And the investors, when you look at it, at the end of the day, it's going to be, you know, you and I as small holders. You know, there's a lot of layers, but it sort of rolls up back to a BlackRock or some large players. But at the end of the day, it's, you know, your money, my money, right? And so I don't see why you would give a mandate to an asset manager to invest in crypto. If you're an individual, you can do it yourself. Why would an asset manager who's really in the business of, let's say, providing some exposure to an existing asset class or tracking an index or something like that, go out of its way and sort of violate its mandate or try to change its mandate to sort of retrofit Bitcoin into the mix? That doesn't necessarily make sense. Why can't we let asset managers that specialize in the crypto market to do that allocation? Like, if you look at Bitcoin, where do you put Bitcoin in BlackRock? Sure, BlackRock could do a new fund and call it the Bitcoin fund, and it's all about Bitcoin, but the reason they haven't done that, you know, there must be a reason. I think that, you know, the fact that they don't have a main also maybe goes back to the fact that it might not be, in their view, a suitable product. And so in terms of the intellectual effort that they should have to make to realize that Bitcoin is that wonderful thesis that we should all buy into, well, you know, they have a lot of smart people at BlackRock. So if they haven't decided that there's a product there, I think there's a reason. And as a retail investor, you're able to buy into Bitcoin. So why should a monster asset manager like BlackRock do that if, you know, you can do that on your own already?
I mean, who's pushing that intellectual discovery, if you like? Or, I mean, in a lot of ways, this is an ideological leap of faith that we're asking institutions to make. And I mean, the question I was going to ask you guys is, who is pushing these institutions? Who is engaging with them? Because in many ways, I mean, they're not reading the block. They're not in these circles.
You know,
so
but they're not going to go out and, like Max says, create a Bitcoin fund.
Absolutely.
But what they can do is there's a huge number of really talented managers in crypto today, you know, and they've got great experience in different asset classes, and they're bringing all that institutional level experience to crypto funds. It's those guys that should be going to the big allocators and saying, I want a very small percentage, and that's how BlackRocks of the world will get their exposure. I mean, they outsource a lot of their management.
You mean individuals?
Anyway. Yeah, I mean, we've seen it. It's starting to traditional, not necessarily the US mutual funds or endowments, but the allocators are starting to allocate very small parcels to existing crypto managers. And there's a lot. I mean, there's some here, and they've got great strategies. They know what they're doing. That's probably how the institutions will start to get
Sorry,
into
I
it.
have to disagree, though. I think the strategies in crypto, first of all, there is limited evidence right now that an actively managed strategy in crypto outperforms a passive fund. We actively track in our private strategies our return versus passively managed indices that are rebalanced.
You talking about funds or the prop trading firms?
Well, he was talking about managers in the crypto space. I think right now the primary question is, most people, why would you pay 2 and 20 for mostly long Bitcoin exposure? So there is also a question of what is it that people actually want at the end of the day, right? I do think that a lot of funds end up being a part of an educational process where a CIO will say, you know what, we'll invest $1 million, $5 million, really small amount just to learn and get familiar with what it is that's happening here. But I think the challenge is what most people want, what's generated return, isn't necessarily diversification, because most crypto assets have a beta of 1 to Bitcoin. This is one of the big challenges, is there are no fundamentals that yet differentiate all of these different assets from one another. And I think ideologically in the mind of most investors, crypto is kind of grouped as one asset class, when Bitcoin is fundamentally very different from something like Ethereum, is fundamentally very different from all these other things, and then you mix in, you know, stable coins and security tokens and all these other constructions. They're fundamentally different things. And so part of it is the formalization of what these managers are doing hasn't made its way into practice yet. That process of taking these informal sort of approaches everyone has and then formalizing them into widely accepted taxonomies, strategies around those taxonomies, they don't exist yet, right? The only strategy we've had for the last 3 years is long only. Maybe there's some actively traded. Now maybe there's some funds that are doing a quant strategy.
I was going to add to that. Yeah, I mean, at the moment, the largest participation of institutional segment is within the prop trading community. The HFTs that have been populating all of the markets around the world, for them, crypto is another emergent market, essentially. And they are fully engaged. There's every single prop trading desk in the world is trading crypto, and they're generating very good returns, equivalent to any other market, because of the inefficiency and growing volatility in the space. I mean,
but trading is about vol, right?
It is, but it's the inefficiency in itself is enough to compensate for lower volumes, and volatility is high. So there's three components you're playing with, and that's what defines your profitability essentially at the end of the day. I mean, arbitrage, you used to be able to trade it manually with a 5% spread across different platforms. You cannot do that anymore because all of them are already in. They're already keeping the spreads very tight, and they generate massive volumes. I mean, we've seen these numbers going up and up and up just within the 6 months period. The level of sort of institutional flow went from 8% to 19%, and it keeps growing and growing. So
what George is saying is very interesting because actually Bitcoin is a reasonably efficient market with a lot of prop trading firms that make that market reasonably efficient, liquid, and the volumes are not necessarily huge. But you compare in some emerging market currencies, they're not very high as well, right? So when we say that, oh, one of the things that's not allowing the institutions to come in with that wall of money is that it doesn't actually depend on the liquidity or the size of the market necessarily, because you have very small, ETF that follow things like not even precious metals, but like uranium and rare earth and things like that. They're very small markets, yet the banks trade them, right? So when you look at also some smaller emerging market currencies, they're widespread, illiquid, and yet you would never wonder why a BlackRock needs to have some exposure to the some South African or something, the rand, right? So it's the fact that the Bitcoin market could become more liquid is not going to bring the institutions, because it's already quite liquid and efficient because of the activity of all those ISP trading firms.
Yeah.
So let's talk about another subject to do with institutions, which is one of my favorite subjects, Bakkt. So their whole model is, we are waiting for the institutions, we will provide for the institutions, we've defined what we mean by that, and we will be ready for them. What are your takes on Bakkt, or rather the philosophy that Bakkt is putting out there, which is we can trade, we can do this for Goldman, we can do this for BlackRock, we can be the venue that they are asking for?
I'm skeptical. Bakkt wants us to trade on the platform, but why would we do that? There's no takers there. There's no interest. It's all HFTs against HFTs, and it's not a recipe for a profitable business model. And when it comes to Goldman Sachs, well, guess what? Without saying too much, Goldman Sachs has or had trading relationships with crypto trading firms back at the peak of the bubble because they wanted to get in. So at that time, they were willing to entertain, having OTC relationships with market makers. So the fact that they have a Bakkt wouldn't necessarily make a lot of sense to them. Actually, you look at the FX market, Goldman Sachs, I think, as of today, is not trading on LMAX, which is one of the main FX exchanges. Why? Because it's too competitive and the HFT firms have taken over. So all the trading that Goldman does is more going to be based on bilateral OTC relationships. So having a crypto exchange for Goldman, that's not exactly what they need. So I don't think that Bakkt is going to be a game changer.
Chris?
Yeah, I agree. I don't think it's not going to be it's not the gold, silver bullet. It's not.
Meltem, our American representative.
I'm actually excited about it. I mean, look, Bakkt is part of the ICE group, and if there's one thing that ICE knows how to do, it's attract people onto their platform. They're already hooked into many of the largest institutions and investment firms in the world. What I think is exciting is the launch of a physically settled futures product. So as we've seen with the US market in particular, the CME has this great cash-settled futures product. It's been trading at record volumes lately, and I think activity in the futures market is indicative of the development of a more efficient market, right? More sophisticated derivatives coming to market is good for the asset class overall. It facilitates more trading and volume. It enables people to express sentiment in new ways other than simply going long. So I think it's good. The fact that these have been cash settled, it's really just like gambling on the price of Bitcoin. So the idea that now a regulated institution is actually going to create a physically backed product that's settled in Bitcoin itself, to me, all of the underlying work they had to do to enable that to happen, from pricing and the calculation engine, from custody, storage, all of the settlement contracts, they're going to start to create and formalize a more robust sort of set of standards for how these things get traded and settled. And then I think over time, one of the biggest problems we have, if I want to write an options contract, number one, I have no standard way to price it. I don't have an independent calculation agent that can reprice that contract dynamically. That's why BitMEX has so many problems. They're constantly repricing millions and millions of contracts. I don't have an ISDA equivalent, right? So what happens, for example, if my reference index, which in the case, BitMEX is Bitstamp, something happens and it causes mass liquidation, like the market is still so informal, and it has been for the last 6 years that I've been in it.
I disagree.
So to me, the presence of someone like Bakkt, it doesn't change it overnight, but it helps to at least start to drive those conversations and more formalization, which I think is helpful, right?
I can't agree with that. You mentioned ISDAs, actually. B2C2 created the first ISDAs in the crypto market something like 1.5 to 2 years ago. I'm sure Caspian has also, big boy, grown-up legal contracts. I don't think it's necessarily about that. And when you talk about options as well, writing OTC options is not something that is dependent on the exchanges, and you don't need a specific calculation agent to do that necessarily.
Right,
I think
but
that this is more around the margin, right?
Versus ICE writing an option and logging it in the ICE trade vault. These are two fundamentally different things, and that is no disrespect to our industry, right? That's no disrespect to the 150 companies I've invested in who are focused on just this market. It's just a reality of how institutions trade.
Quick question then. You have the CBOE. It was actually not exactly a physically settled future, but the CBOE was based on an auction. So essentially, you could physically deliver into the auction and trade. Yet they're closing the product because they didn't gather any traction. So I don't think that sort of playing around and trying to change the structure a little bit at the margin necessarily a game changer.
George, maybe just pop in.
Let me, let me put a punt on there. It's about credibility. It's about the brand name. It's about recognition. It's the same universal rules that drive businesses in retail or institutional space. They know people in the market. Obviously, they have the credibility to drive business in. It's like you said. They know how to do it. So it's. Yeah, I mean, it's a good thing for the market because, again, if we have a benchmark of some kind that has been rubber stamped by whoever it is, but the market itself, it's a good thing to have, yeah.
I mean, we are still preempting demand. It is a good thing for the market hypothetically, but if there's no one knocking at the door, then we've got a great system and no one's using it.
What do you mean no one's using it? I mean,
the whole question, I guess the whole point of the panel for me is trying to gauge when demand will come. If we're not talking about if, we're talking about when, as Chris highlighted. So the point
I think everyone here is pretty busy today, right? Like
yes.
you have customers.
Yeah, we're all in
here
crypto though. None of us are in a way we're trying to work out if even though we think this is going to be a great system, this is Bakkt I'm talking about, to the institution. I mean, maybe you have better insight into the institutions than I do, but are they going to be knocking at the door to use it, even if we think it is fantastic?
I think we may sometimes be setting ourselves up for failure by misidentifying the real trends and what we need to put together to create a successful industry. So you look at Coinbase, they thought they needed to hire 30 people in Chicago to create an HFT matching engine. Didn't work out. What if we have Bakkt and it's set up to be that perfect system, but actually there's no volume? Right. Optically, it's not great, right? Yep. And so I think that by thinking that always being in that startup mentality, build it and they will come. If they don't come, what do we do?
Right. We're building before they've come.
Yeah, I mean, I think the brand name is good, right? Brand name recognition. I mean, every time Goldman say, oh, we're going to do crypto, the whole crypto world goes mad. I question why, though. What is it that they're going to bring to this industry?
Price, maybe.
Other than potential branding, right? That it gives it a form of credibility with the regulators, with perhaps the bigger funds. But the reality is the crypto needs to evolve using the managers that are here now, using the prop shops that are here now. George is right. The HFT shops generate a tremendous amount of volume, and they do very well out of it. So there's a long way to go, I think, before you need to have the big brand names involved. I think they'll help, but it's not going to be a silver bullet.
Yeah, back in end of 2017, I remember I was talking to one of the fund administrators, and they had, out of the newly registered funds, you would see like 30% of them would have blockchain or crypto in it. So that was obviously the result of a hype, right? So the winter kind of died that interest down, but it doesn't mean that this is not going to be another sort of influx of new hedge funds, which is most of the time driven by family offices or high net worth individuals that want to commercialize their trading ideas or some small firms. So right now, this small and medium kind of enterprises would be driving the space. But everybody's waiting for the big guys to go in, and that's regulation, that's, availability of the infrastructure and so on and so forth.
And I think the big thing is efficiency. I think one of the things we don't appreciate is how expensive it is to bring a crypto strategy in-house. You have to hire a dedicated team. You typically need to revamp your security infrastructure. Then you're having to start to go out and procure services. So you're paying for trades 10 to 15 basis points at least each way, not including a spread. Max says bad, but it happens, and people rip your face off still on the OTC side. Then you have a fund admin who can specialize in accounting for this. Then you add in a specialized audit firm. Maybe you have to do independent valuation. So very quickly, right, if you're charging 2 and 20, very quickly your expense ratio every year could be at 150 basis points before you've even sold a single dollar into the fund. And so I think one of the opportunities here, we see more platforms emerging that are prime brokerage platforms that are bundling services together. One of the big things I've been working on for the last 5 years is starting to integrate so that all the exchanges share one common API, getting platforms to talk to one another, just making the onboarding process easier so that I don't have to open, when I want to deploy crypto strategy or allocate to crypto, I don't want to have to open 18 different accounts, go through 18 different legal agreements, sign them, fund them, and then start moving capital around these different exchanges. Like, it's very messy and very clunky. So I think the more that players in the space work together with one another, but also with new and emerging platforms, existing players in the traditional fintech space, the easier it becomes to onboard people into the ecosystem. It's really about lowering the barrier to entry and reducing friction and reducing, really it's a cost question as well, because if it's not profitable for you to execute a strategy, there's zero incentive in it for you as a manager. So I think a lot of times in our industry, we don't think enough about collaboration. People talk about competition, like, we're not competing against one another, we're competing against every other asset class to accrue AUM, and we don't have it.
I mean, that's a good point. The cost of running a fund is huge and
crazy.
setting up. So,
Crazy.
And I think we all, hopefully, we all think about this the same way, that you don't have to do everything. You can interact and produce. If you can produce a good prime brokerage platform that interacts with custody and wallets and market data and brokerage, everything, right? So I think that's right, and I think certainly that's the way we look at the world.
The infrastructure is one of the key areas where institutionals don't come, and again, the prime broker in the securities world solves many issues, and the hedge funds know why prime broker is very useful and why they come to prime broker. I mean, sometimes it's incredibly difficult to get a prime brokerage account. So in the crypto space, there are no prime brokers available. I mean, there's 1 or 2 cases that I know of that go for this model. So, and they're not even really live.
That's a very good point.
We've only got 2 minutes, and I can hear the bar hotting up. So we all want to get out and get a beer.
Wait, there's a bar? Why are we here?
Exactly, I can hear them having a great time.
All of these people deserve like
free.
a trophy for sitting here.
We'll get into the bar soon. So we've got 30 seconds each. One of the questions that I hear a lot from purists in the space is, if institutions come, does that potentially infringe on the anti-establishment core that a lot of crypto enthusiasts talk about? 30 seconds each. Maybe George, let's start with you.
Sorry, I didn't hear the question.
Question is, will institutions come in? Will institutions join the space potentially infringe on the anti-establishment ideology that a lot of people believe in it?
No, definitely not. I mean, most of us come from the regulated backgrounds, and we know how the regulated markets work, and I think there's going to be some middle grounds between between being libertarian and believing in free market and the regulation. So there's going to be some common grounds, and again, institutional world is very much regulated. We cannot really exist without being regulated, because there's clients' money behind us. We have responsibility. And I think this is going to be there's going to be some middle ground. So,
ongoing tension in Bitcoin since the day it started. I think right now there are two sort of divergent paths. Integrating Bitcoin into existing capital markets is one path, and then this idea of sort of the Bitcoin revolution, no intermediaries, being your own bank, that's also an important theme. I think over time, though, as capital markets start to evolve and as institutions start to understand why Bitcoin is so unique and special, my dream is that we'll be able to actually have people hold the keys to their own assets, and we'll actually start to change some of the fundamental ways that we think about capital markets, asset management, wealth management in our world today. It's an evolution, requires education, and today the way we're going to make it work is by taking what we do and jamming it into the institutional box. That's it.
I mean, there is a bit of a clash of cultures, when you talk about Goldman Sachs in the same conversation as libertarians and Bitcoin. I think ultimately, though, the benefit to the community, the investment in infrastructure from having institutional money will out, and that will probably be the way forward.
Is that primarily price, the benefit that you're talking about?
I mean price and investment, right? I mean, if these guys come in, there'll be an investment in companies, in infrastructure, in players within the space. So I think that will overcome, but you may end up with a divergence of, into.
Well, they're arguably not short of money. I've seen the size of these venture capital funds.
But exactly, I think there is a conflict between the ethos, anti-establishment ethos of crypto and institutionalization, and it's going to come to a head. I don't think it's compatible, actually. And what we're going to see is that the market's going to bifurcate, maybe a little bit like paper trading in commodities versus physical trading, or actually maybe even worse than that. I think between the sort of like more like walled garden, full KYC infrastructure, and the rest of the market, which is more like local Bitcoins. And I think that it's not going to be something that's going to be easy to navigate.
So perhaps a clash of cultures. Thank you very much for joining us. Enjoy the bar.
Cheers. Cheers.